Hey folks, Matt with Black Diamond Mortgage here, and I want to talk to you about your credit score. So we do mortgages and loans here, and your credit score is a really important piece of that when getting a loan. It can help you get a lower interest rate. So we're going to talk about 6 items that affect your credit score and what you can do to help improve it. So the first one is the amount of inquiries in the past 2 years. It doesn't affect your credit score heavily, but it's important not to have too many inquiries. Credit companies, reporting agencies will treat a similar inquiry as maybe one. So if don't be afraid to shop for a mortgage or shop for a car and get multiple inquiries. The next one is the number of new accounts in the past 2 years. So you want to make sure that you're not opening them too quickly. That can sometimes show credit reporting industries or agencies that you might be overextending yourself by trying to open too much credit too soon. Another one that's a low factor is your total available credit. So as you start to open more and more lines of credit and get more available credit, that will improve your score. $25,000 in credit is a very good thing, and that does a large jump for your score. So work towards getting towards that number. Something that moderately affects your credit, but there's not much you can do about it, is your oldest line of credit. So what a lot of people do is they get that first credit card at a young age and they use it, and then they get some new ones and they think, oh, I'm going to close that credit card, I don't need it anymore, I don't use it. While that's not a terrible idea, it is important to make sure that the age of your credit improves. So keeping that old line of credit open, even though you're not using it too frequently, is actually going to help improve your score. So keep those lines open. One of the most important factors is keeping your payments on time. So it's really important, even if you're having some issues making a payment or anything like that, always make the minimum payments on those credit cards. Any late payment, especially something that goes past 30 days, is going to heavily affect your score. And then the only thing that's going to fix that is more longer term of on-time payments. So keep those payments on time. And then finally, the most important piece is the amount of your credit use. So if you have, $25,000 in credit, you want to make sure that you're not using that or tapping all of that credit out. A good gauge is to use 10 to 20% of your credit, and that's going to keep a good score. The nice thing about this one is that it's the most important factor, but it's easily remediable. If you pay down those credit limits, you're going to see your score rise drastically. So if you have any other questions on how to improve your score or what your score is, come see us down at Black Diamond. We'd love to help you out.